Hello, everyone, and good morning, good afternoon. Welcome back to the Breakfast Show with myself and my co-host here, Jose. How are you today?
Pretty good. Good morning, and good morning to everybody joining us. Yeah, we're getting better at this, it seems, Neil. A little bit more frequent. I'm happy.
Yeah, a bit more. Yeah, no, we started 3 times a week. Now this is a 4th time in a row, although shorter stream. I mean, it's better than nothing. It's better than nothing. At least you get to see us one extra day for the week. Remember, tomorrow the markets in the United States are closed for the 4th of July. Jose and everyone is going to get drunk for the whole weekend.
For the whole weekend. That's exactly what we do here in America. We get drunk for the whole 4th of July weekend.
So today's video, I don't want to discuss the OpenAI Oracle news. There was also some news that came out with regards to US lifting chip design software curves against China, and maybe some misunderstanding from some that it might or might not impact companies like AMD or Nvda. So we're going to talk about all of that, and then maybe some fintech stocks as well, maybe one specific one, because fintech has been getting a little bit more love more recently. We also have some macro data here. So like Nuno says here, non-farm payrolls up 147,000. Estimated one was 106,000. Unemployment rate 4.1%. Estimated number was 4.3%. So again, I mean, the first number is more than expected, and then the unemployment rate falling is definitely something good.
And just gonna showcase some of the love we're getting here, Neo. So good morning, Waldo. Good morning, Karim. Good morning, Nicholas. Good day, good guys. Good day, guys. You both are great to follow. Appreciate it. Can hear you guys all day. Is quite informative. And Kimberly just agrees with the overall sentiment. That's what Americans do for 4th of July. We get drunk all weekend.
And then yourself.
Yep, just
yourself.
Good morning. Yes, myself. Good morning to all. Good morning, Jose. Thank you for joining us.
No, I was actually in the States last year. I said that yesterday. I was 4th of July in Vegas last year. It was pretty good. Pretty good. We have some more data, actually, some more macro data. So let me pull that one up when that wants to load. Voila. So yeah, it seemed, I mean, it's good data. I don't know if it's great for rate cuts, because good macro data usually means that why would you cut, right? If everything looks great, why would you start cutting? So the non-farm payrolls, we talked about that, unemployment rate as well. Average hourly earnings year over year, 3.7%. Estimated one was 3.78. Average hourly earnings month over month was up 0.2. Estimated was 0.3. US jobless claims, 233,000. Estimated number was 240.5. And then the US continuing claims 1.9, it's very specific, 1.964 million versus the estimated number 1.962 million. So, I mean, yeah, good numbers, I guess. Let's see what the market's reaction is right now. Pre-market, we still have the 10-year yield at 4.34%. I think that jumped a little bit since yesterday. Yeah, actually it jumped right now. It jumped right now. And I assume, let's first look at some European markets. So Europe is green right now. Asia, flattish. Pre-market, we are green, but it's basically
Barely anything, right?
yeah.
Yeah.
I mean, stock
Um,
futures pop. Do you see any pop here? Because I can't
I
see
don't
any.
know. Not
I can't
even.
see any pop here. No pop. No pop. What
Yeah.
about the euro dollar? Still 1.17. Good for me, bad for people that, I mean, if I sell my US stocks and convert it into euros, I lose on this.
Yeah.
But if I want to buy US stocks with my euros, I win on this.
Neil, I don't usually follow kind of like the currency exchange stuff, but are these types of movements normal? I mean, I would feel like 0.5% on euro to USD and like 0.78% on US to Japanese yen are pretty volatile. If I would say, I don't know volatile, but just
I won't say volatile per se, because I mean, yesterday we were 1.18, and I mean, if we look at this year to date, right? We started the year 1.02.
yeah.
This started to go up after the April tariff announcements, and yeah, continues to go up and up and up. I mean, maybe there's going to be an increase in demand for the dollar, and that might drop it again. But so far, the dollar is quite weak, which is actually, I mean, it's not great for Americans that will maybe want to travel to Europe or something, but it's great for exports, right? If
Yeah.
your currency is stronger than the US dollar, that's great. It's great for a lot of big companies as well that do have exposure to international markets and report in US dollars. Previously, that was an FX headwind when the US
And then
was strong. Now it's a
in
tailwind.
theory, right, Neil, it could create like more tourism here for U.S. destinations from Europeans, right? If they want to spend more dollars, if they want a bigger bank for their dollars, they can just come here and spend it on U.S. based companies.
In theory, yes. In practice, the US has become so expensive that even with this currency weakening, I don't know if the quality is that rewarding. I mean, I've been to Miami. It's also obviously one of the most expensive places, but yeah, I don't know. I don't know. From my feeling, the price that you pay in the US, even for just basic food, has become crazy.
I see. I guess because I'm already originally from Jersey, Neil is probably one of the expensive states. Anytime I usually go any other states outside of Cali and a handful of other states, everything else seems cheap. So I don't know if
Yeah,
I've
that's the
just
thing.
been numb to it.
That's the thing. If you come from Europe, for example, where yes, prices did increase, of course, for a lot of things, energy, food, whatever. But compared to the US, we're still now there is movement. Compared to the US, we're still considered quite cheap. Now, yes, our currency is worth more today than it was at the start of the year, so maybe that might balance it out. But yeah, still there are so many things in the US like healthy. That's the thing. Healthy food is super expensive. It just doesn't make any sense to me. Um,
Yeah. Neil, there are some questions here I wouldn't mind taking a closer look at before I know we have a main topic, but
yeah,
you got one. So go
yeah.
ahead.
So as a European investor, aren't we losing on a weak dollar? You're only losing if you sell your US stocks and convert them back to euros.
Yeah.
If you don't, then you don't. We as Europeans, actually, if you want to buy US stocks, you're winning because now your
Yeah, you're
euros
buying
can
you're
buy.
able to buy more.
Yeah,
Yeah.
you're able to buy more shares,
Hmm.
basically right now. But yes, if you convert your US dollars back to euros, then you are of course taking a hit for sure.
Yeah. And then I want to look at this. Nicholas, can you recommend some platforms from where to trade? I just started investing. However, I did it using bank services and they're not good anymore. So, Nicholas, first, welcome to the investing world. It's definitely going to be a fun and crazy and sad and stressful experience, especially at the beginning. I am going to say there's going to find times where you're going to feel like you're maybe the greatest investor, and then the market just tells you, psych, you thought you were, and it kicks you in the back. So just be prepared for a lot of learning, but it is great. I think investing is one of the best ways to build up massive amount of wealth. If you are in the United States, Nicholas, I one of the most favored platform is Robinhood from its ease to use. It's extremely easy to use. I personally use Fidelity. Main reason was because when most of my 401k was in a Fidelity account. So it just kind of made ease for me to have everything under one roof. And I don't know, it felt easy to just stay in that one platform. And yeah, Neil, that was hilarious yesterday. Um, the market is such a funny thing. It's like every time I started talking on hood stock, it was already in a trend, right? Just completely, I know, unrelated to me, but it was just funny. Every time I would talk, the stock would go up, and whenever I stopped talking, the stock would go down. And it was like there, over there, the hoodies over there started to get pretty excited. So it was a fun time over there midstream.
I mean, talking about investing platform, you just mentioned, I mean, Robinhood and the one that you're using. There is another company that's very similar to Robinhood that is gaining more traction right now, it seems, in the retail space, and that's WeBull. I'm pretty sure you heard about this company,
Hmm.
WeBull. It went
Holy
public.
smokes!
Yeah, it's a SPAC here, by the way.
Oh, okay, yeah.
So SPAC, boom, huge rally, and then it was basically dead in the
Oh,
water
this is the
for.
one with the cool ticker.
Yeah, exactly. The best ticker probably, bull, better than the big bear. So it started to go up. Of course, it's up over 40% from the lows from 2 weeks or so ago. So you might say, oh, I missed my opportunity. I don't think so. I think there was, since it was a SPAC, I think that there were also some warrants that were executed not so long ago. And I think the day they were executed, let me make sure. Yeah, so they redeemed their incentive warrants, and the day that was redeemed, the stock started to go up a little bit. Well, a little bit, 30-40% or so. And it's a
Mhm.
company. It's an interesting company because it's a company that operates a bit worldwide, I can say. Market cap pretty low, I think around $5 billion or so right now. Yeah, 6.4 billion. Pre-market, it seems like it's going up even more, 4.5%. There's definitely a lot of momentum now around this stock. You are seeing also some creators talk about, I mean, I'm talking about this, but I believe Tevis from Future Investing, Fun of Investing, Tevis talked about it on his channel, I think yesterday or 2 days ago. Chris wrote about this in his newsletter. So it's definitely getting a little bit more attention, especially since, well, Robinhood has had such a huge increase in value over the last year or so. People might say, oh, I missed Robinhood. This might be the next best thing. Low market cap, $6 billion. platform is very similar. Actually, they're basically copying what Robinhood is doing, which you might say is a bad thing. I think it's a good thing, especially from a user perspective, because I think Robinhood does have a very easy platform to use. And so you might say, interesting play. I might have missed Robinhood, or I only had a 2-3x with Robinhood, and this might be my opportunity to catch Robinhood equivalent at maybe here $14-15 or so, and see where it goes. I know we're a bit off topic here, but I said we're going to talk about fintech later. But let's just finish the fintech segment right now,
Go ahead.
since we are talking about this already. So we can
Wait,
check
so
here.
are you a bullish on this one, Neil, or
I mean,
what's
I've
going
known
on?
about
Or it's
I've known
just
about the
interesting?
name.
Mhm.
Yeah, it's just interesting because I mean I've known about the name. I think we've seen it pop up right here and there, and now I'm seeing it pop up a little bit more recently because of the Chris and Tevis that spoke about it. So I started looking at it this morning. Interesting, definitely interesting company. It's not as big of a grower just yet as a Robinhood, but it's still early days. And if we actually look at what they've been doing for the last couple of quarters, let's say, so they had the initial pump, I'd say, in their business, then it dropped, and then from the December quarter here of 2023, it started to go up revenue wise, picking up some momentum here. I believe they also launched a crypto business. So there is definitely something interesting to be seen with this one. Operating income last quarter was also positive. So yeah, I mean, this is usually a good thing when you see this pop. The question here is, does this only happen during a bull market? Right? Because with Robinhood, the whole bear thesis previously was, okay, Robinhood can only grow and operate profitably when there is a huge bull market. Can it do it in a bear market? I think Robinhood right now has diversified its business quite well to be able to sustain profitable business even in a bear market. Now, again, remains to be seen. But if we suddenly have a 2022, how well Robinhood will operate in a bear market, because yes, they are still generating the most amount of revenue from transaction-based revenue, whether it's options, stocks, or crypto. So we'll see, but it's one I'll study a little bit more. I'll have to go into the earnings report and all of that, listen to what they've been saying. But it's definitely interesting. It's definitely interesting if you really want to get exposure to maybe a Robinhood type. We have your comment saying, I have my main portfolio in WeBull. It's much better product than a Robinhood. So we have here already some positive comments on this company. Of course, it's one comment. I respect that comment, but it's a subjective thing, I guess, right?
Yeah, and it does seem, obviously, I mean, a lot of the hoodies, it seems, are very bullish on the CEO as well.
Yes,
and
it makes sense.
Yeah, I mean, it's pretty cool when you see a company still in the $1 billion, where you have kind of I think the other thing with Palantir as well is, like, when the CEO actually takes their time to talk to kind of like the retail investors and join kind of like retail channels. I think that is pretty interesting to see how it shows. I don't know if it's just deployed, but it kind of shows that even the small investor matters. And I think that's something that maybe more traditional CEOs of older companies, like, don't, once you're like, oh, I'm hundreds of billions or whatever, it's like, I don't need to worry about the small investor. I'm just worrying about these big banks.
Yeah, I mean, fair point. Roberto, you say Mr. Couch is part of my conspiracy. The conspiracy is this. Seems like a coordination. Some of the other guys in the stock draft yesterday, I didn't know there was another stock draft, started promoting pumping WeBull. Is there anything to it, or are they trying to start a new retail
conspiracy trend? I agree, Roberto. There's something happening, and I wasn't invited, and that sucks.
I wasn't invited either. But the only reason I'm bringing this up is because two other creators talked about it.
Mhm.
But again, it doesn't mean it's a bad company. You also have to understand that as creators, whether it's on X or on YouTube, if something is trending, of course everybody will pick it up and share its own opinion on it, because well, that's what content creators do, and most of the people anyways ask for our opinion on every stock that trends, so might as well talk about it. But I don't own WeBull. Jose doesn't own WeBull.
Yeah.
So right now
Let's see if
I'm
the couch effect goes into effect. Couch talking about a company not expected to surge in the following 2 weeks.
I mean
Um,
so far it's up pre-market, but I don't think that's
yeah.
my thing.
Sure,
Although
sure.
yesterday I did talk again about Oscar and picked up some shares, and whew, thank God today it's up a little bit. So we continue.
I was going to ask you if you picked up the Oscar because I saw someone in the comments here talk about it, Neo.
Yeah.
I also completely off topic, Neo, but Christian, Chris, hey, both of you. They mentioned that you're using the trial version here of Fiscal.ai. We are partners with them. There is a link down below to get 2 free weeks, as well as. But it seems like they're having some issues. Christian, I just want to say I'll email the person that handles our partnership and get it to you. Maybe if you can just quickly, you don't have to put your whole email, but maybe just like the first few letters, so I can kind of say, hey, look, someone with this email in the free trial is having this issue. Again, you don't have to put the whole email address on the comments, but maybe just like the first few letters, so we can kind of get it sorted out for you. And
a
appreciate
quick
appreciate you. Hopefully you used our code to get that, because that would help out the channel a lot.
and a quick question. If you have used a new account or an already existing one, if it's an existing one, then the pro trial will not work. If it's a new one, then it should be working, and we will figure this out. Last thing here on the WeBull conspiracy, last thing here, and this is something that should be better. So they have 24.1 registered users. That was up 17%, so that's great. But the funded accounts are only 4.7. Yes, that increased 10% year over year, but quarterly retention sits at 97.5%. So only 4.7 out of the 24.1 are funded accounts. They only make money when you fund your account. They don't make money just because you sign up and you use the free features on WeBull. So this is something you want to see improve quarter after quarter for sure. So, and by the way, all of this, you don't even have to go to WeBull's investor presentation. You can go on Fiscal.ai and get all of this on the platform. Can even get the AI summary here. So last quarter revenue increased 32%, adjusted operating profit significantly increased year over year. Customer assets, $12.6 billion, up 45% year over year. So the thing is, investing is getting easier with platforms like this, where you get everything in the platform, the transcript, the reports, the slides, an AI summary. You can even ask it questions specifically, and it will just show you everything. If there is a company that did release a report on it, Morningstar or whatnot, you usually get it here in the research tab. So pretty amazing platform. And of course, if you want to try it out, you can use our link down in the description and in the pinned comment. We would really appreciate that. Now we can actually talk about some AI stuff. Now we can talk about the AI
Definitely.
stuff.
And before we kind of take the AI, I want to take this question from Matt really quickly. So, Matt, any thoughts on Marvell with the Microsoft announcement of yesterday? I would say, for those that are not familiar, what Matt is talking about is Marvell helps big tech players design their own AI chips. One of the customers, and unfortunately we have to through speculations and kind of just who makes it to the events to try to understand what company is building what AI chip. Because unfortunately we don't really get the real answer on this through speculations. Microsoft's AI chip, the Maya, is a Marvell product, and their first generation sucked. They just had limited productions. Their second generation is reportedly to be delayed, and now kind of the it seems like throughout, not just generation 2 is delayed, but generation 3 and so on have been pushed back a little bit more based on these reports. The first thing is, it does showcase that building your own ASIC solution is hard. And that's the same thing. I mean, we always hear about the great story of Google's TPU. But remember, Google's TPU is on their 6th, 7th generation already. So the hiccup, first generations most likely sucked. It sucked for Amazon as well. So the other thing, Neil, is I feel like right now we're in a market where Nvidia and AMD are a lot more aggressive in their roadmap. Back then, it was a 2-year cadence. So it gave the opportunity for these ASIC players to maybe have some form of wiggle room in catching up. I think nowadays, because of that yearly cadence, that's not possible anymore. You can't mess up. And the market's a little bit more investigator or keeping a closer eye on things like that. I'm still bullish in Marvell. During their earnings, they actually even already kind of hinted into this. They've mentioned that one of the customers has kind of been pushing some of the things back of the customers that they have. Marvell also has more than just ASICs AI accelerators. They also do a lot of kind of processors and other types of add-ons. And throughout their AI events, they did talk about kind of all those customers that they've kind of won. They've even won some of like the non-traditional cloud service providers. Some reports believe that it could be XAI and some other companies out there. So I think Marvell is definitely in the right place. There's going to be a lot of noise in this market because of things like this, and I do believe things like this could create the opportunity. Yeah, I mean, I own Marvell. Anything below 70s or low 70s, I really do like a lot. But it does come with that risk that the ASIC market could create a lot of volatility with news like this. Even though sometimes they do give us these updates throughout the earnings and the AI events where they kind of talk a little bit about scheduling. So too long, don't watch. It's bullish in Marvell, but I understand the risk behind it.
Yeah, no, fair enough. Fair enough. Why is every news website now paywalled? This is horrible. Anyways, we have here, of course, that big news that came out, but it's big news, but we already knew about some of the things, right? So Oracle, I hate these websites, I swear. Oracle stock rallies on report of expanded Stargate deal with OpenAI. Of course, we've talked about Oracle jumping at the start of the week because of a little, what is this? Ads for Tesla? No. You have to pay us for ads. At the start of the week, we've had a new updated filing that said that they're expected to generate more than $30 billion annually starting in 2028 for Oracle. And we speculated that this might be Stargate. And it seems like this is because of this announcement right here. There are going to be more Stargate projects with OpenAI in the United States, that is. So OpenAI, the creator of ChatGPT, will rent additional cloud computing capacity from Oracle, totaling about 4.5 gigawatts of data center power in the United States, according to the Bloomberg report. The agreement marks an expansion of the buzzy Stargate AI infrastructure project, according to the report. So pretty big deal, right? Pretty big deal, because this means we're going to get even more gigantic data centers, which probably also means more GPUs, right? More GPUs coming from AMD and Nvda, I would assume.
Yeah, no, I agree, Neil. The reason I was extremely excited about this is I didn't know which Stargate project it was going to be, because I didn't think it was just the vanilla Stargate project we heard here in the United States, due to the time frame that they gave, fiscal year of 2028. I'm pretty sure most of the Stargate that they announced, especially the one in Texas, is going to be built way before that. It seems like what you mentioned is there's an extension happening to that Stargate project. So that's extremely bullish in my opinion. And like Oracle, we know these data centers are definitely powered by Nvidia, but Oracle has a great partnership with AMD. They do actually buy a lot of AMD chips. The other thing is we know OpenAI is also a great partner. We saw them in there as well. So I still am very much a believer that these are going to be more than majority, more than three quarters, maybe more than 80% Nvidia chips. But I do believe there is the opportunity for AMD to have great growth here because of this. And what was it, 4.5 gigawatts of total capacity they talk about. And Jensen in the past has kind of given a quick math that for every gigawatt, you have about $40 billion of revenue. So that's the 40 times 4.5 is closer to what, almost 200, maybe closer to 180. 180 billion dollars of revenue just coming from this one customer. And this is just the Stargate, right? Oracle is still building other data centers outside of Stargate, and you have kind of Stargate in other parts of the world. So it gets me pretty excited. And again, it's just one player here, Oracle. You have all the AI companies, all other cloud service provider, and it continues to show that strength that the AI market is really it right now.
Yeah, I mean, these numbers are crazy, right? Because yes, the first Stargate project, right, $500 billion, but we quickly found out that it's not going to be $500 billion straight out of the gate. It's going to be closer to 100 billion. But the fact that this was announced in Oracle's filing, right, that they expect deals to be worth more than $30 billion annually, starting in 2028 is insane. This is crazy. But yeah, I mean, this is of course great for Nvidia and AMD. I don't know what the split will be, but like you said, Oracle and OpenAI do have quite a good partnership with both, with Nvidia and AMD, but with AMD coming out with, I guess, more competitive products next year and the year after that, since this is for 2028, well, the revenue generated will be starting 2028. I would assume that AMD will get maybe its chance to get a bigger chunk than what's going on right now. How big? I don't know. It remains to be seen. But this is definitely some good news.
I my question is also, I wish they had more insight in that release. I would wonder if they're expecting to turn it all in at once, which I doubt it. I think it's more like they build. Traditionally, what ends up happening is you build part of the data center, you turn it on, you continue to expand while that one's already running. So it's already kind of revenue generating before that. So I would love to see kind of a roadmap. I wish they could provide things like that, like a roadmap of, Oracle is already a huge player, but maybe a roadmap of when they expect to build how many gigawatts by when, and when do they expect to turn on so many of them. So like that, investors can definitely see where the demand is really at and picking up.
It's quite crazy that a company like Oracle almost doubled from the April lows. And I mean, quite quickly. Pretty impressive for sure.
Staying here in the semiconductor and AI space, we've gotten a question from both our channels here. So Chris, what about U.S. lift chip design export curbs on China? And I think somebody on my channel as well. I think Eddie, do you guys mind talking about Cadence stock if you haven't already? So Neil, obviously I follow this space pretty obsessively. And one of the things that I mentioned when we first saw this is, to me, this was a pure trade enacted thing, where it was going to be used to kind of help bring China to the table a lot faster. And once the trade and once the discussion was happening, we've seen a lot of export restrictions. You've seen export restrictions on high performance AI chip like the H100 and everything outside of that. You've seen export restrictions on weaker down AI chips like the H800 the H20 and the Blackwell equivalents of that. You've also seen kind of export restrictions on semiconductor equipment manufacturing and a lot of companies being blacklisted as well from China. Out of all those, the one that made the most sense to be like, it's definitely important, but it's not as extremely crucial as all the other players, was this kind of EDA software restriction. So my thought is, if there was one to come out of that export restriction list first, it was going to be this one, because I think it would be like the most impactful. The most impactful would be the last one. So releasing the H100, the Blackwell 200, the Blackwell 300 would be the last on the list, in my opinion, to ever happen in forms of export restrictions. But this is, it seems this is the first coming out. And I think we both maybe talked about it, Neil, when we kind of saw kind of China and US trade discussions and how things were going right. They kind of even talked about that they were going to reduce some of the export restrictions. So I'm curious now to see how Cadence and Synopsys are reacting to this, or because I do believe when we kind of saw the original thoughts on China and US, you already had some form of momentum. I'm looking at Cadence right now. Cadence is up about 4.6%. Synopsys is up about 4% as well.
Yeah, I mean, it's very important, and sneaky wool cloth. I'll touch on that comment in a bit. It's important to note that this is not affecting NVIDIA or AMD at the moment, right? This is purely about software, the side of it, like the Cadence and the Synopsys players, like you mentioned. So that's very important for those that are wondering why an AMD stock, for example, is not really moving right now after this announcement. It's basically this, right? The restrictions on those companies are still in play. Of course, this can open up the door for improvements in the chip exports control that do affect the likes of AMD and Nvidia. But so far, right now, it will only have an effect on the software side of the ecosystem, let's say.
Yeah, and I agree. That's the sometimes the market, the way wording happens all over the these export restrictions, it makes it seem like it's a whole semiconductor thing. I think when this got banned in China, it said like semiconductor advanced technologies or something like that for AI chip development. So it did kind of create, at least for a few hours, some negative reaction towards AMD and Nvidia and all these other players, because they thought it was more restrictions happening to that space. So it's also very funny to see how the market reacts to things like this, because they might think it's really well for one player. Like you mentioned, the bullish take here for an AMD or Nvidia investor is it showcases that certain export restrictions are seen more as a trade playing card opposed to an actual national security issue. And I do believe one of those playing cards is the H20, the B30, and the AMD's MI308. And I don't know if they have a 350 variant for China. They most likely designed one before the export restrictions for it. But I also do believe that is another trading trump card. A lot harder to use that one, though. I think China would have to give up a lot to be able to for us to see the U.S. put that into effect or use that card. But I do believe it's mainly a trade, because we still have the strength of the H100, the H200, the Blackwells, and the best AI chips.
Yeah, now, to correct myself, I said software side, but no, it's chip design software firms. So yeah, I mean, it's a good move, I guess. It's a good move. I wonder how much these companies are up on this news. So let's see.
I said 4%. Both were about 4%.
Not bad.
Yeah.
Okay, not bad. They also seem a nice recovery. Okay, pretty good, and I guess good news. I do want to touch on a comment here from Sneaky Woolcloth on Fiscal.ai showing or not showing Q1 Q1, Q2, Q3, but showing the dates. Like for example, here when you put in quarterly, it shows you March 25, December. So that's basically telling you what quarter you're at, but not Q1, Q3, Q4. He sent in a request if they could add like March 25, Q1. So for now, quick solution for you. If you do quarterly, if you look at the thing, you look here at the top, the latest transcript is the latest quarter. So Q3 is March 25 for them, because
That's a
different
good way to use
companies,
it. Yeah.
because again, different companies have different fiscal years, right? Some
Yeah.
companies are still in fiscal 25, some others are in fiscal 26.
Yeah, Microsoft, for example, is right now even in Q4 of fiscal year of 2026, I think, or some. I know they're about to end their fiscal year, so they're in Q4. Even though in calendar, most of us are in Q2. Yeah.
Welcome to Microsoft fiscal year 25. So they're already in fiscal Q4.
Yeah. So yeah.
I mean,
Well, we're back in you're in
Q4
July.
ended,
Yeah.
Q4 ended
like
for
2
them.
days
So
ago.
they are Q1
Yeah.
fiscal 26 already.
Yeah. So
right
it's so
now.
weird. Yeah. But I can definitely see that being a nice perk, especially if you could just read somehow the transcript already knows what quarter it is.
Yeah, exactly. So
I'm not a developer. I don't know how. Yeah, good suggestion. Thank you,
Yeah.
Sneaky Wool.
Good suggestion. So in the meantime, this is an easy way to figure out every time you go on a company. For example, we go, maybe Apple is also a bit different. So Apple, you see you're in the...
Apple does one thing right,
also,
it seems.
Also March 25, but that's Q2 2025. And it's fiscal 25, so they basically follow. No, they don't.
Oh wait, no.
They're also 1 month.
They're a quarter ahead. Never mind. They don't even do that wrong.
So that's for now the easy fix. But I'll send. I guess I'll send Ryan a message. Some people say that WeBull will go bankrupt. I don't know about that, but we'll see. Staying on the semiconductor chip data center story, another company that also is getting quite a lot of attention, and also one that pumped because I made a video, so the conspiracy continues here. So Iron is pleased to announce the expansion of its AI cloud business. They purchased 2,400 Nvidia Blackwell GPUs B200 and B300. So that's good for you, Jose. They fully funded. It was fully funded from their own cash reserves. They're deploying it at their Prince George data center. They've increased the total fleet to 4,300 Nvidia GPUs. I think there are also some H100s there. They're locking the next-gen training and inference at scale, expecting strong risk-adjusted returns, and these support opportunities across AI data center business. So I guess, I mean, the stock, I don't think that the stock is moving pre-market, although now that I said it, maybe it might, but no, it's not really moving that much pre-market at the moment. But as you can see, it's also
nearly
up
tripled.
Significantly since the April lows. But forget about the April lows. If you only look at the last, 2 weeks and a half or so, it's up 53%. So
nice.
There is definitely a lot of momentum here. Yes, it's true. It's also one of those, Bitcoin mining was our core business. It's still a very good business for us, profitable, but we are switching, where we're diversifying towards being a AI cloud data center provider, which, I mean, I guess if you have all of the facilities and the build out know-how, then why not? Makes sense, right? If you have the energy and all of it, so it makes sense, since that's another way to make quite a lot of money. So yeah.
Neil, is this one closer to a CoreWeave or closer to Applied Digital? I don't know if I asked you this question yesterday or 2 days ago.
No, I think it's much closer to an Applied Digital, and CoreWeave might actually be like a one that gives them also a 15-year, $7 billion contract, for example, or might even acquire it.
Yeah. A quick one. I do have a list of some of these stocks that are very similar to this. Another one, there's Applied Digital, that is very popular in this one. There's
Does
also
Nvidia
another
still
one
have
here.
shares of it?
Applied of
Did
digital, I think so. Yeah, I think they did. Biggest
pump
one is
it,
obviously CoreWeave.
Jensen, pump it.
Um, I don't think they have. They definitely don't have TerraWolf. But another one that could be starting to see this overall momentum, just because of the overall momentum, is Wolf. Have you seen that one, Neil? But Wolf with
Yes.
a U, not.
Yeah,
Yes.
yeah.
Oh, okay. Oh,
Ah, you think I
yeah.
don't know
Okay.
you? You think I know you?
How did you know I was going to bring this one up?
Because I read it yesterday on my feed. I was
Oh,
like, interesting. And I was like, okay.
yeah. Yeah. So I was just looking at. I have. Let me go to TradingView. I have like this whole Bitcoin mining list. The other one was the one that applied core we've tried to buy was Core Scientific, but that one's gone
Yeah.
up a nice amount.
Because of
Another
the
one,
bid, which
yeah.
again, people think that if they are going to acquire a Core Scientific, then maybe there's going to be a re-rating of Iron because it's very, very similar. And if they are willing to pay X amount for that company, then maybe the other company should be worth something closer to that. So yeah, we'll see. But we always come back, and I said Applied Digital, I have a price at $7-8 or so, the price alert.
Mm-hmm.
But even at $10, the fact that it stays at $10 and it does seem like it wants to consolidate around that price where previously it was a resistance, might now be a support. Plus the fact that this name already got a huge contract, right, from
Mm-hmm.
CoreWeave. I mean,
Yeah.
$7 billion in 15 years is almost $500 million each year. And this
Yeah.
company, what did we say, is worth $2.3 billion. So only from that contract, it's already quite attractive, I'd say.
Yeah. I agree. I agree. Another one, Neo, that I'm gonna have. Michi.
What?
Migi. Like I said, I have this list, very old list that I'm
This
just
one?
pulling up right now. Also deals in kind of like it used to doing the crypto mining, and most likely it's gonna start moving into AI space. And the final one that I know is Hut, ticker HUT, Hut 8 Corporation. So if you need any more pumping up some great AI mining potential, those are definitely a fun list.
This Miji is worth less than $1 per share. That's a
Yeah.
degenerate move.
Yeah, all these are degenerate moves in my opinion, though.
This one has also doubled since April. This Pizza Hut. Interesting. Yeah, I
This
mean,
Pizza Hut.
I mean, these are the. I mean, I'm thinking, of course, of Iron and Applied Digital really as like a minuscule play that if it
Yeah.
works out, then great. It's like a holiday money that I can spend later
Mhm.
on, and if it
Yeah.
doesn't, then I don't care because it won't hurt my portfolio.
Yeah.
Um,
Yeah, again, these that I mentioned very similar. It's just the overall trend, and I know sometimes people
Cipher.
like CoreWeave was like the first one, I think, right? And then everybody started to move a little bit more. Maybe not everybody, but the market started to get more excited about kind of like nebulous, and now it seems
Sheesh.
like okay, it's Applied Digital, and now it's the other one, it's the other trend. So, if it's very similar to you, this would be a degen gamble play if I was to do one. I don't know. I'm thinking about Wolf actually, just to see if I can
What do
get
they
some sneak dinners.
differently or the same?
It would be very similar to kind of like your it's they kind of just built that AI infrastructure and they started off as that BTC mining and now they're like, oh look, you have the thing. That's the top level of everything that I know behind stuff like this. I haven't really looked at it, but there's this massive excitement right now in it. Yeah, and I'm pretty sure if you go through all of them, I mean, did Iron not have similar things like this?
Yeah,
So it's
this one
all
in 2022 down, and
yeah.
then it seems
Most
like
of these are like this. Is they all started in during the Bitcoin mining phase, which all jumped dramatically. Next thing you know, Bitcoin was dead, mining was dead, and you started to see these become penny stocks. And now all these penny stocks have kind of created this movement to AI infrastructure, and it's creating this nice momentum for a lot of these. Some are doing it maybe a little bit faster
Yeah.
or a little bit better than others. But I would say all of these are, you can kind of throw them all in the same bucket.
Yeah, it's interesting because we're now, again, technical. I don't know, but it seems like we've been there twice already at around
Yeah.
$15-16 or so. So this time we'll see if it can go above it. It is already overbought significantly
Mhm.
right now on the daily. So we'll see. What about, let's see, Wolf? Wolf is still not overbought. So plus it was
Yeah.
not that long ago in 2024. It almost was double that. But with these, I guess it's important to definitely understand the business, understand the
Yeah.
roadmap, how fast they're going, how fast they're building their data centers, and how good the team is.
Yeah. And Eddie here has a really interesting question. What's the advantage of using small cloud providers like Iron? I'm guessing that's Iron. Um,
Hmm.
I don't know how to pronounce it, but and Nebius. So first, just a quick correction here to Eddie, right? Maybe you can correct me if I'm wrong. Iron is infrastructure for the infrastructure. Um, so this is the one that helps build make sure it builds the infrastructure, these warehouses. It makes sure it has the power availability, it has the water availability, so then Nebius can come with their chips and their whole rack servers and doesn't have to worry about the permitting of building these data centers. The data center, the the outer wall and the shells and all the things have been built there that now they just have to bring the AI chips and connect them all, or kind of all these AI servers and connect them all. So I think there's that difference. Is that to am I correct there with Iron, Neil? It's the infrastructure of the infrastructure.
It's the infrastructure, which again is a big advantage if you can do it
Mhm.
in an efficient
Yeah,
way, an energy efficient way.
yeah.
Um,
Um,
but
but now, Eddie,
I think
oh,
Nebius also builds,
mhm.
and that's also one of their
Yeah,
big advantage.
yeah. So a lot of these, and Eddie, no worries with that. It's and like Neil mentioned, some of these like they do build their own. But right now it's come to a place where you need to build this infrastructure so quick that it's better for you to rent someone else who already has it built, because obviously you have to go through all these legal paperwork and all that takes time. So it's easier for like a Nebius or a CoreWeave to go end up with Iron or Applied Digital, just because it speeds up the process dramatically. Um, Achilles mentions Nebius rents more than builds, and I'm gonna guess at least right now in this AI market, this is gonna be the true for most players. Now, back to the main question: is why would someone pick these over Azure? First, it's just pricing, or AWS, or all the pricing. I mean, to rent out kind of like some AI chips like the H100 or anything, it's like $6 using it with like AWS or Azure or Google Cloud. Obviously, you can call and get kind of pricing power, but if you just hit one of the buttons, it's closer to $6. Where if you kind of do it with like a Nebius or CoreWeave, you're paying a lot cheaper. Reason you're paying a lot cheaper is you probably get a lot less solutions. Some people just want pure bare metal, which is something CoreWeave does, where it's just it gives you the chips and you do everything else behind it. Nebius provides like some software stack solution on top that helps with that, so they're able to charge a little bit more. Amazon and the other players do even more than that, but they also charge you that premium of them being kind of like a top player. So for a company like OpenAI, who needs a lot of compute and they don't really need someone to handle all the software solutions, for them, they don't want to be paying. I mean, they're going to be having gigawatts and gigawatts of chips. They're not going to want to go to Amazon truly to pay that $6, $4, $5 an hour on these chips. They'd rather go to someone else that they can save so much more money, but on the understanding that they will handle a lot more of kind of like the software stack. But for them, it makes the most sense. So yeah, that's one of the advantage. It's usually maybe for those big players that can really handle all these solutions themselves. The final thing is, this is why Neil, I've talked about it in the past. Leptin from Nvda, I believe, is creating more tension for the cloud providers. So Leptin, Nvda announced it in GTC France, no, GTC Paris, both plain place, but I wanted to make sure I had the name correct. I think GTC Paris was the actual name, where it's like the Uber of AI cloud infrastructure, where you can go to maybe not an app, but let's just make believe it's an app and say, look, I need some AI compute. And then you have kind of this marketplace of everybody renting it out. I think this is going to create a lot of pricing pressure. And I was just listening to a podcast. If you want to check out my previous video, I talked about this podcast that semi-analysis even goes more in detail about Leptin AI. And he also does believe that Leptin is going to create some pressure on some of these clouding companies. But fortunately for NVIDIA, you can't go against NVIDIA. What are you going to say? You're going to say something bad about NVIDIA, and then NVIDIA is just going to be like, nice to hear that. We'll see what happens to some of your orders in the futures, or something like that. But Leptin, in my opinion, could be a bearish case for companies like CoreWeave, for companies like Nebulas, because it does create more of a pricing pressure in this market.
I had a counter argument to that thing last time. I said it would just create more demand for these players because it is now a marketplace where you can see which one provides the best value for what you need at the moment, and just ease of use, right? You can just look at that list and say, okay, we want this, 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 and that, which is maybe something that previously you did not have access to. You didn't have the visibility, I'd say.
So at first I agree with that one, Neil, but the way, and I would love to see kind of how the app works. The way semi-analysis was explaining Leptin is NVIDIA goes and rents out this extra space on a bare metal price, and then they rent it out themselves. So you don't even, if you were like a Nebulas or somebody else who had a software stack solution on top of that, that margin is no longer there because you're not able to rent out that process. Leptin is providing that software solution for you. You're only able to rent out at a bare metal price. And that kind of eliminates a lot of the moats of some of these players out there, where now it's just, if you're just a bare metal, you're all these other players that provided some form of software stack solution on top of it. They're like, that moat is gone. And now the competitive pressure becomes even stronger. So I would love to see a little bit more of that Leptin AI. But if that is true, where you strip it out and make it more of just a pure bare metal rental, and Leptin does all the AI solutions for you, now I think it brings back to that competitive pressure. But if it's just like, hey, look, a true marketplace, whereas you just put the pricing and you still showcase what you can bring to it, then I agree with it. But the way semi-analysis, Dylan Patel was talking about it, it was more of like a strip of everything, and it's just a pure bare metal, no matter who you are.
Interesting. So I wonder why companies like Nebulas, for example, would. I mean, there is a reason they partner up, because they were on that list, right? I think they were on that slide, and I would assume they're gaining something from it.
I mean, that's the thing. I think the only thing is like, you're at least making sure all your AI infrastructure is probably going to be running, which at least means you're not going to be burning cash. And then, unfortunately, right, nowadays is in this market, if NVIDIA has that marketplace Uber, it's going to be more likely that your customers are just going to look at that instead of going to you directly, unless you have a really strong partnership. But for any new player, anybody new in the AI market, if they're looking for a GPU cloud service provider, they'll be like, oh, look, I know NVIDIA runs a marketplace. Let me check that out. And it kind of creates more of a hurdle for some of these other companies to get new customers. So it's one of those markets. It's like, damn if I do and damn if I don't, but really damn if I don't, because I don't want to end up in NVIDIA's bad side. So it's pretty weird. It's definitely really weird. I really want to hear more about Leptin. I definitely want to re-listen to that podcast, and I'll send it to you, Neil. But it does kind of create this pressure on the cloud service providers, and we'll see how this kind of evolves over time, because that's another thing. NVIDIA can kind of change a lot of the terms behind it. But would love to. This is one where I would love to hear more from management discussing it a little bit more.
Yeah, no, it's going to be interesting. I
Yeah.
mean, I understand the point that you're making. By the way, market is open right now, and Alex, we will touch on your question from the super chat in a second. Um, yeah, I mean, it's true that when you go, let's say, on that marketplace, you see a name, you click on it, and you're done. But it might, of course, lead to you saying, okay, actually, interesting pricing from, for example, a Nebius or a CoreWeave. For Nebius, for example, they could just say, oh, actually, maybe let's contact them and see actually what they offer, because they do offer a full suite of solutions. So it might increase their sale, but like you said, it will definitely make sure that utilization rate is very, very high, thanks to that exposure to the marketplace, for sure.
Yeah, it's one of those, Neil, that my thoughts, well, it seems I'm extremely bearish at it right now. It's one of those very, and we can see market right now doing pretty, certain stocks doing pretty, I didn't see much red, luckily. It seems a lot of good. Hood is down. It seems about 3%. I wonder if it has to do with that OpenAI post
I think it has to do
yesterday.
with you. Has to do with
With
you.
me. It has to do with me. With that OpenAI post we saw yesterday, kind of combating
the
that
tokens
tokenized
of,
thing.
yeah,
Yeah.
which, I mean, it makes sense. They probably had to clarify it
Yeah, they
for
were
their own,
probably getting a lot of emails or
from their
letters.
own
Yeah.
investors, like what the heck is going on here. But then Vlad and Robinhood also clarified their own sites,
Yeah.
basically, because they own it. But just so everybody knows, you don't own anything when you do this, right? You don't own a share of OpenAI. It's basically a derivative. That's basically what it is. You have no voting rights. You have nothing. The only thing you have is exposure to a potential higher valuation of OpenAI, and that's how your token will go up. Plus, with the other stocks, with the other US stocks in the stock token side of things for us Europeans, just so you know, go buy the real stock. Don't buy the token, right? If you have access to the real stock, go buy the real stock, because then you own it. Of course, with the tokenized one, you have access 24/5, etc., etc. But if you can buy the stock straight out and own it, you should definitely do it.
Yeah. And I think, Neil, this is I saw the post, and it's like so many people were like kind of bashing OpenAI and saying no duh, Sherlock, blah blah blah. And it's like, I think we talked about it yesterday, Neil, where sometimes we follow a company too much. When you follow a company too much, even the common sense thing, is like what you think is common sense. You think the rest of the world knows. And I'm not a Hood shareholder or follower, so when I saw kind of that tokenized, and even when I talked about it, I was like, yo, that's pretty cool. You get to own actually OpenAI tokens and stuff like that. And I thought it was actually part of a way for it to be. I didn't know it was like a derivative of it. So it's like I can understand why other people who really don't follow this, even though can get misrepresentation from something like this. So yeah,
Yeah,
I think
no,
it's also important. Yeah, go ahead, Neil.
it's part of also Robinhood's aggressive marketing push, I'd say. I mean, you could have used the word derivative in your post and announcement, but you didn't for a very specific case. Now, okay, again, I went on the app. It tells you exactly, like, before you actually buy anything tokenized, yeah, you have to go through a couple of questions. So it's up to you to read it. And if you don't read it, and then you say, "Oh, they screwed me over," no, actually, you screwed yourself over because you didn't read. You didn't read. It's not even fine print. It's just you didn't read what was on the screen, literally. But yeah, it does seem like most of the stocks are green right now. So pretty good. Before we end, Jose, you had one question here about
Yeah.
Innodata.
Innodata, to be honest, Alex, I'm gonna say I apologize. I don't follow this one too much. Actually, at all. I don't follow it at all. But Neil, I don't know if we can kind of jump into Fiscal.ai to see what we can learn about it pretty quickly. To maybe just share some thoughts. Maybe we can do a really quick reading what they do, a quick AI summary of the recent earnings and see some of the growth opportunities behind it. So, a global data engineering company in the United States. The company operates through three segments. So the DDS segment offers AI-enabled software platforms and managed services to companies that require data for training AI and machine learning algorithms and AI digital transformation. So I'm going to guess this is probably one of the excited things, right? So it does seem like, obviously, with the data space, that your true growth right now is coming from the AI data market. So we can see quarter one, $58.3 million, 120% year over year increase. They are adjusted EBITDA profitable. I would love to, maybe after this, Neil, maybe take a closer look at some of the balance sheets, financials. Yeah. So I would love to see kind of what their cash position looks like. They mentioned expansion of existing customers. Obviously, the agentic AI focus, actively building platforms there. Guidance, it reaffirms its full year guidance of 40% or greater. I'm going to guess it's going to be more on the greater side here, while still delivering adjusted EBITDA above its 2024 results. If quickly, Neil, can you click on slides here? I just want to, just on slides to see what they share. If anything cool, maybe just a quick look. Again, this is what they're most likely going to keep talking about. But I just wanted to see maybe if they had a list of some of their top customers. Maybe up top, Neil, I think there was like a customer list here. No, those are their competitors. So you can see they do have a lot of competitors there. Obviously, they have opportunities for growth continue. Nice. I sometimes hate charts like that, Neil. I don't know if you saw it. It was going up to like 2032. How do you know what the heck your market opportunity is going to be in 2032? I stop at like 2026, 2027 the most, but regardless, they are very excited there. Services and SaaS is about services 91%, SaaS about 9%. I wonder if they're trying to go their SaaS more. So it seems like they do more of engineering right now with it, right? So that's why the services is probably a higher thing. If they increase that SaaS to even more, you would expect margins to increase. Also, with services, you might be limited to engineers and actually pure talent. So there is some hurdle in maybe how fast you can really grow revenue. And maybe that's why you're seeing kind of maybe not much sequential growth. And another thing I would want to look at, right, Alex, is their employee count. Is it showcasing a similar line to revenue count? And it kind of showcases that, yes, you need to continue to grow in employees to grow revenue. Clean balance sheet with no external debt and offerings, and they have about 56 million. The final thing is, what is the price to sales and kind of like PE ratios to it? Just a quick forward valuation, just to kind of be a little curious here. So forward, that's the PE currently. I would be more excited on forward basis. That's next 12 months. Sorry. So the PE 70 and EV to sales 5.9. I mean, EV to sales, I think, would probably be a closer indication here. But yeah, I could see the growth opportunity, at least on the top level. The revenue and employee would be a big thing, because we saw services was a big revenue portion of it.
It's expected to grow rapidly, 32.2% for 2 years, revenue-wise. So I guess that's pretty good.
And some guy named David Silva, shout out, sounds like a cool name, said Nvda dividend just hit the account. Fire.
Those 1 cents are going to...
Yes. Martin says not yet in Europe, David, but Martin's going to get a nice few thousands of dollars here in dividend, probably. Big Will Martin.
It seems like, look at the net income switch here. Like went from net loss to net income, and then it's expected to take a hit this year. And then
I also wonder how much, like if they're doing a lot of cash stock-based compensation, and if it increased dramatically, and if you kind of like if the net there would be similar. Oh man, my little one is there.
He's calling you.
Yeah, not too much of a jump. Not too much.
I mean, yeah. I mean, compared to
Yeah, that's
a
true.
jump,
That's
a
true.
jump, still
Yeah.
a jump. But yeah. Anyways, you have that duty calling. Plus,
Yeah.
plus, I have to see you again pretty soon.
Make it seem like that's a bad thing.
No, have they Nasdaq today? Oh, okay.
Yeah, it's
Good
half
to
day
know.
today. Us Americans need to start drinking ASAP.
Exactly.
All right.
All right, everyone. Thank you all for joining this quick stream on Thursday. Apparently, half day Nasdaq today, no day at all tomorrow. So we'll see each other Monday morning for
Monday.
another stream.